at the beginning of doing business, kind of contrary to what you said, like you can only scale whenever you start working with other people. And whether that's banks or lenders or capital providers, private investors, whatever it is, you need other people's money to scale a business that is a relatively illiquid business. Land is one of the most illiquid asset classes that exists. Yes, there are markets that Dan and I both do business in that it feels liquid because the turnaround time can be 2 weeks to a couple months, which is in terms of investment decisions, not even an investment. It's a wholesale of inventory that you purchase. But I think at the beginning and still today, I'm terrified to lose investor capital. I've never lost investor capital, knock on wood. I hope I never will. I hold that fiduciary responsibility to a really, really, really high standard. And I think from that, I was scared to take other people's money on. And so whenever people were putting money into my land deals, I was like, okay, well, if I was, worked really hard to save up money to have the ability to invest, how would I want a deal structured? And for me, I was like, well, I would want it with only upside and absolutely no downside to eliminate risk in the decision. And so the way I had my attorney structure these deals was, okay, the capital provider comes in, and, I do the management of the deal, and then we do a profit split whenever it sells, 50-50, 30-70, 70-30, every mix in between. However, what, we put in there as a contingency is if the property doesn't sell within 9 months or 12 months or 15 months or whatever it is, the investor will get all of their capital back plus interest.